It's now time for our Golden Nugget segment, which is sponsored by the Naples Family Office Symposium, which is going to be held this year in Naples, Florida on October 3rd and 4th. The Naples Symposium, it's focused on uniting family offices, wealth managers, and other sophisticated investors through leading experts adept at navigating today's intricate market dynamics. So go check out the Naples Symposium. The link is in the comment section below. Lyn, let's discuss portfolio positioning. Understand that you're not a financial advisor, and based on all we've discussed today, and with your experience and your worldview as the backdrop, how are you positioning for the next 12 months? I know you said gold and I know you said uranium. What other assets do you like, and what assets do you absolutely want to stay away from?
I generally like emerging markets and Bitcoin here as, slice of a portfolio. Generally you have to mitigate their volatility to whatever makes sense for your portfolio needs, but I do like them as part of that portfolio for the next 12 months. Kind of more structurally, my approach right now and for a while is a three-pillar approach. So instead of the 60/40 stock bond approach, which is really geared toward expecting disinflation, I have a three-pillar portfolio, which is, one pillar of equities, which includes, global equities, domestic and global equities. And then one pillar is like cash equivalents, T-bills, tips, generally the shorter duration types of things. That's more for liquidity contractions and things like that. And then one pillar is basically commodity producers and hard monies. So the energy stocks, the uranium position, the gold position, the Bitcoin position, maybe certain infrastructure assets, things that generally hold up better in the period of debasement, period of inflation. And so I feel like those three pillars generally work pretty well. As far as things to stay away from, uh, when I see a stock like Costco trading at 55 times earnings, I don't, it's already, if you would ask me 12 months ago, would I buy it? No, and it's done okay. So I don't know what it's going to do for the next 12 months. But the area that I'm staying away from is what I've called that risk off bubble, which is that there's so much capital that just wants to own these really good blue chip companies, but for prices that I think are out of range compared to what they're probably worth. And so you could have a bulletproof company, but not a bulletproof stock. So that's where I'm a little bit concerned.
Makes sense. Now, are your three pillars equally weighted?
No, I think basically every investor has their own age, risk tolerance, volatility tolerance. I generally am more equity focused than many investors. Because I'm involved in the Bitcoin space, I'm willing to weight that a little bit higher than what you would typically recommend in someone's portfolio. So everyone has to kind of tweak that to what they're expecting their portfolio to do.